Hey guys, welcome back. This video is going to be very exciting because today we're going to talk about the strat patterns, and these patterns work really well in any market, be it forex, commodities or stocks. And after this video you'll be able to detect these strat patterns successfully on your charts and you'll be able to trade them. So this video is going to be the first part of 2 to 3 video series. In this first one, I want to build your basic concepts about how you can successfully detect the strat patterns and how you can look for trading opportunities. In our next video that will be coming hopefully next week, you'll see the strat patterns in action. So without any further ado, let's get started. So first of all, before we dive into the strat patterns themselves, we need to clarify what they are built upon. So the strat patterns are built upon two market structures. The first one is the broadening market structure. According to the strat strategy, broadening is the expanding of the market. It means the price will make bullish trend or bearish trend. So this means that according to this strategy, the market is broadening and the market is making these continuous higher highs and lower lows, as you can see here. So this means that market is broadening. The second concept is the market contraction, and in contraction the price will move inward towards a point. Each progressive wave will be smaller than the previous one. So as you can see in this one here, the market is making these continuous lower highs and higher lows, which means that market is moving towards this point. So these are two market structures that you need to keep in mind because they will come in handy when we talk about the types of the strat patterns. And as I said earlier, the strat patterns are nothing but different candlestick patterns that are combined to form different combinations of the market structures that give us the predetermined or expected outcome. So the first candlestick pattern that we need to learn is the inside candlestick. And in the inside candlestick, as you already know, the next candle is totally within the range of this previous candle. So we can see that high and low of this previous candle is above the high and low and below the low of this next candle. So this candle forms totally within the range of this previous candle, and this pattern in strat patterns is called number one. So you have to keep in mind and you have to remember this, in fact, because we'll be using these combination, for example 1 2 3 and 1 2 1 1 3 2 1 as will come across next. So this is number one, the inside candlestick. The second one is the trending candlestick, and inside the trending candlestick what happens is the second candle breaks either the high or low. So for example here we can see that in this previous candle the low is here, and this next candle is breaking this high in this low in the downward direction. So this is a bearish trending candlestick, and this will be called as number two. And similarly here we can see that this next candle is breaking the high of this previous candle. So this is again a trending candlestick, and this type of structure where the market breaks either the low or high of the previous candle is called number two in the strat candlestick. So the number one is the inside, the number two is the trending candlestick, which breaks either the low or high of its previous candle. Now let's talk about the number three, that is outside bar, and you may also call it the engulfing candle. So in the number three, what happens is it's reverse of the inside candlestick. So what happens is it's like the broadening pattern, okay, market broadening structure, as we studied earlier. Here we can see that the market is broadening, and similarly here we can see that the previous candle is totally forming within the range of this next candle. So this next candle makes a higher high and a lower low, as we can see here. The colors of these candles don't matter at all. All that matters is the market structure. So these both two possibilities are the number three in the strat patterns. And here as well we can see that with the formation of this high and low, there is another formation on the next panel of higher high and lower low. So this is broadening market structure, and this is the contraction market structure in the number one candlestick. So the three types of candlesticks that you need to keep in mind is number one, the inside, the number two, that is trending candle, and number three, that is outside bar candlestick. And now by combining these different candlestick patterns, we'll be making the strat patterns as you'll see now. So there are two types of the strat patterns. The first one is in-force patterns, and these patterns forecast the current market. It shows us where the price will move either up or down. So we will use these in-force patterns to determine or to forecast the trade in lower time frame. And for example, we'll be using or detecting these candlestick patterns on the daily time frame, and then we can go down and look for any day trading opportunities that we can find at lower time frame, like 5-minute, 10-minute, or 15-minute time frames. So these are in-force patterns that they don't give us direct take profit and entry levels, but they provide us with a market direction, like where the market will be headed next. So these are called in-force patterns. And again, we can break them down into bearish reversal patterns, the bullish reversal patterns, and the trend continuation patterns. So let's go through these one by one so that you'll understand how they work. So here you can see that this is a 1-3 bearish reversal. Now, if you remember earlier, what we discussed is 1 is the inside bar. So this one is the inside bar. And here we can see that this inside bar is forming because the previous candle high is here and low is here, and this next candle, this one, is forming within the range of this previous candle. So this is 1, this is 3, that is third was it would be outside bar candlestick, in which the next candle totally engulfs the previous candle, and you can see that high of this next candle is above the high of this middle candle, and the low of this next candle or 3 candle is below the low of this next previous candle. So this is how we successfully determine the 1-3 bearish reversal, the strat pattern. And if you don't remember earlier, that 1 is the inside, 3 is the outside bar candlestick. So by combining these two, 1 and 3, we have successfully detected a 1-3 bearish reversal, the strat pattern. And now what this pattern suggests is the trend will move in the bearish direction. So we can mark these levels and we can go towards lower time frames to look for any trading opportunity. Similarly, here we can see that this is 1-2 bearish reversal, and 1-2 bearish reversal, as you can see in the one, the first part is this one. Okay, so this is the one part in which this is the formation of this inside bar, and then the low of this inside bar you can see is being broken down by this next candle, that is 2. So this 2 is breaking this low of this previous candle, and now this is again a 1-2 bearish reversal, and this suggests that market will move in the bearish direction. So again, you can see by combining the 1 candlestick that was inside bar and 2 candlestick that was the trending candlestick, which breaks the low of this middle candle, we are detecting 1-2 bearish reversal pattern, the strat pattern, and this suggests that the market will move in the bearish direction. Now let's talk about 2-2 bearish. And in 2-2 bearish, we know that here we can see the formation of this 2 because this high of the market or this first candle is being broken by the second candle. So this is a trending candle. And one thing I haven't mentioned yet, in the detection of strat patterns, we have to consider the whole range of candles. So we'll be including these highs and lows, and we'll be considering the VIX as well. So as you can see, the high of this previous candle is being broken by this next candle. So this is 2, and again we can see that there is formation of this candle, this 2 candle, which breaks the low of this middle candle. So this is again 2 candle. So this type of pattern, the strat pattern, tells us about the 2-2 bearish reversal, which says the market will move in the bearish direction. And similarly, if we look here, this is 1-2 bearish reversal. So we'll be looking for the formation of both the patterns, the 1 and 2 and 2. So the 1 pattern is here, the inside bar is here because the high and low of this first candle is above and below the high and low of this next candle respectively. So this is the inside bar, and here we can see the high of this candle is being broken by this trending 2 candle. So this is again 2 candle, and then next candle again is breaking the low of this previous or 2 candle, which we can see here. So this is telling us about the momentum of sellers, and this is a 1-2 bearish reversal candle, which says the market will move in the bearish direction. Now, by learning these, I think you understand how these will work as well. Okay, so I'd ask you to go ahead and try them out and try to figure out how these 3 are working, because I can explain them as well, but it'll just it will just make the video longer because the concept I have already explained to you in these 4 types. Now let's talk about the bullish reversal candlesticks. And inside the bullish reversal in force candlesticks, we can see they work in a very similar way, but they're just opposite. So in the opposite here, we can see that this is the 1-3 bullish reversal. So in 1-3 bullish reversal, there's the formation of this inside bar. As we can see here, the high and low of this next candle is within the range of the high and low of this first candle. So this is the formation of an inside bar. And then this 3 candle is again engulfing this previous candle. So this is the outside bar. So high and low of this 3 candle is above and below the high and low of this middle candle. So this is the formation of 3 and this is the formation of 1, and this pattern all by itself is 1-3 bullish reversal pattern, and it suggests that market will move in the bullish direction. So we can detect this bullish reversal pattern and go towards lower time frame to look for any long entries that we can find. So now again, here we can see that this is 1-2 bullish reversal, and 1 being this inside bar here, and 2 being this trending candle that is breaking the high of this previous candle. So this again suggests the market will move in the bullish direction. This is 2-2 bullish reversal, which means that here we can see that this low is being broken by this next candle. So this is the 2, and again this next candle, this 2 candle, is breaking the high of this previous or middle candle. So this is again a trending candle. So this is a 2-2 bullish reversal, which tells us or forecasts the market will move in the bullish direction. And similarly, these 1-2-2, 3-2-2, 3-1-2, and 2-1-2 bullish reversal patterns work in similar way as I have explained earlier. So go ahead and try them out and let me know if you have any questions down below. Now let's move towards the continuation patterns. And these continuation patterns, just like the bullish and bearish reversals, the continuation patterns are the strat patterns that give us the trend continuation. So the trend before the formation of these patterns, these trend continuation patterns, will either be bullish or bearish, and these types of patterns form just to confirm that market will continue to move in the direction it's already moving. So for example, here we can see the formation of this bullish trend continuation. So this is 2-2 bullish, which means that the high of this first candle is being broken by this trending candle, and then again the high of this trending candle is being broken by this next trending candle. So this is 2-2 bullish continuation, which tells us that previously the market was moving in the bullish direction, and after the formation of this pattern the market will continue to move in the bullish direction. And similarly, this is the 2-2 bearish continuation, which tells us that previously the market is in bearish trend, and here we can see that the low of this candle is being broken by this 2 trending candle, and again here we can see the market breaking this low of this middle candle by forming another trending candle that is 2 according to our TheStrat Patterns strategy. So the market will continue to move in the bearish direction, and here we can see the formation of this 2-1-2 bearish continuation. So what this means is the first candle is going to be trending candle, as we can see here, and the next candle is this one, which is the inside bar. As we can see, it is forming inside the body of this previous candle, and then again the next candle is going to be a trending candle. As we can see, it's breaking this low and moving in the bearish direction. So this is 2-1-2 bearish continuation candle, and here we can see again this is the 2-1-2 bullish continuation. So this works in similar way as the 2-1-2 bearish continuation, just in opposite direction. So these are the in-force patterns that tell us about where the market is headed. So you can go towards lower time frame and look for the entries at lower time frame, for example 5-minute, 10-minute, or 15-minute time frames. Now the second type of the strat patterns are the actionable patterns, and these patterns give us direct entry and take profit levels and stop losses according to the strategy. So these patterns give the entry and the stop loss levels, so we can open a trade and add a stop loss and take profit level according to these actionable strat patterns. So again, in this actionable strat patterns, we can divide them into bullish reversal, bearish reversal, and the trend continuation. Inside the bullish reversal, the first one is the 2-1-2 bullish reversal. So for example, here you can see that this is the formation of trending candle, that is number 2, and then again this is the inside bar that is forming within the range of this previous candle, and again there is an other inside bar. So this is 2-1-1 candle. Now how we trade this pattern is we will enter the trade once this next candle that will form will break the high of this candle. Okay, so this is bullish reversal, so we'll open entry here and we'll add our take profit to this level. Okay, we'll put our take profit above the high of this 2 candle. And similarly, here we can see the 311 bullish reversal, which means that this is the inside, this is the outside bar that is engulfing this previous candle, as we can see here. And then the formation of these inside bars are the 1 and 1. And what we can do is we can enter the trade here. We can add our stop loss at the low of this middle candle, and we can take profit at the high of this 3 candle. So this is how this works. And similarly, we can use these bullish 321 and 121 bullish reversal candlestick patterns as an actionable pattern to take entry here and take profit here. So you see how the bullish reversal patterns work. Now I'm gonna explain these further in the next video that will be coming out, and we'll be using these candlestick patterns in our strategy. Now let's look for the bearish reversal patterns, and they're just opposite of what we have just discussed. So for example, here we can see we can use these bearish reversal, the strat patterns, and this is the formation of 211 bearish reversal, which tells us that previously the trend will be bullish, and after the formation of this candle, the market will move in the bearish direction, and we can use this low as our entry point and this low of this 2 candle as our take target or take profit level. And you can see that this is the trending candle, that is number 2, and then 1 and 1, that these both are inside candles. And similarly, these 311, 321 and 121 are the bearish reversal actionable the strat patterns, so we can use them to open trades and put our entry and stop loss levels. Now the last thing that we're going to discuss today is the continuation actionable patterns, and these continuation actionable patterns are the 211 bullish continuation and 211 bearish continuation. And we can use these continuation patterns because in the bullish 211 bullish, the market will be moving in the bullish direction, and after the formation of this pattern, the market will continue to move in the bullish direction. That we can enter our entry, and we can put our entry at the high of this 1 candle, and then we can add our take profit at the high of this 2 candle. So this is the 211 bullish continuation, and in case of bearish continuation, we can enter the market 211 bearish continuation. We can enter the market at the low of this 1 candle, and we can take profit at the low of this candle here, and we can put our stop loss at the high of this one. And similarly, we can put our stop loss at the low of this one here in case of bullish continuation as well. So I hope you understand how the strat patterns form and how you can detect them successfully on the charts. Don't worry if you are not able to grab the concept. I have put the link to the full article explaining the working of the strat patterns and everything that I have discussed in this video. And also, I would advise you to watch this video twice or thrice if you were not able to grab the concept completely. In the next video that will be coming out, I'll be using these patterns in the live trades and showing you how by using these very beautiful patterns you can enter the market in real time. So I hope you like this video. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to like, share, and subscribe. See you in the next video. Thank you.